Hello, hope you're doing well. I'm Arslan, and this is Trading Robot. In this video, we will look at the Ripple chart on one min frame. We will check it out to see what you could have done. We will review trades with this bot focusing on one asset and time frame. Let's see how it goes. Last trade gave a signal. Before that, we start from first signal and go through them. Considered hedging, you can open long and short trades simultaneously. Open them if you want, if not, that is fine. Calculate these later. Marked 4 positions. We'll explain each step by step. Let's start from here. The first signal we had was a buy signal, highlighting that. We had a buy signal on alpha candle, enter on close. We've traded with this bot on one asset and time frame, and we'll analyze them. The last trade signaled a few candles ago, and we'll review it. Starting from the first signal, we'll go through each. I've considered a hedging approach, allowing both long and short trades. Open them if you wish. Otherwise, calculate later. I've marked 4 positions, and we'll explain each, step by step. The first signal was a buy on the alpha candle, entering at the close. The stop loss is at the previous low or below the white line. Since the white line is above our entry, we place it at the previous low. Our risk reward is 1.5 or 2. I'll use 2. Set the target at 8 to 10%. Consider a leverage of 20. Let's calculate. 8 times 20 gives 16%. Correct? 16%. We have a sell signal at the candle's close, entering there. The stop loss is at the white line or previous highs, placed at the white line, which is close. I'll show where the white line is placed. The stop loss is below the white line, so we place it at the previous low. Our risk to reward is 1.5 or 2. Set the target at 8 to 10%. With a leverage of 20, how much is that? 8 times 20 is 16%. We have a sell signal at the candle's close, so we enter there. The stop loss is at the white line or previous highs, placed close to the white line. We set a risk to reward ratio of 2. The target should be 7.3% per hour. With a leverage of 20, how much is that? 7.3 times 20. 8 times 20 equals positive 16%, right? That's positive 16%. Here we have a sell signal at the close of the candle. So we enter at the close of the candle. The stop loss is at the white line or the previous highs. And we place the previous highs at the white line, which is very close. Now I'll show you where we place the white line. We set our risk to reward ratio to 2. The risk to reward ratio of 2 applies, and this is where our stop loss will hit. The target should be 7.3% per hour. If we take a leverage of 20, how much does that make? 7.3 times 20, 14 and 16 negative. Let's copy this. So minus 14 and 16 was 14 and 6. Minus 14 and 6, negative. Let's highlight the negatives in red and the positives in a different color for style. Moving aside to avoid overlap, we've set that up. Now the next signal here has given a buy signal at the close of the candle, so we enter at the close of the buy candle. 14 and 16 minus. Let's copy this. Let's minus 14 and 16 was 14 and 6. Let's put negative 14 and 6. Let's highlight the negatives in red and the positives in a different color, just to add a bit of style. Alright, that's done. Now I'm moving a bit to the side so these positions don't overlap. We've set that up. Now the next signal here has given a buy signal at the close of the candle, so we enter at the close of the buy candle. We enter at the close of the candle. I want to point out one thing. The bot we're using is the Tesla trading bot, which you can get from the Trading Robot website. You can also search for it on Google by typing Tesla trading bot, or you can access it through the caption of this video. When you enter the product page, you'll find a 16-minute video and a 13-minute video that I created about how to use this bot, including where to enter, where to set your stop loss, and how to set your target. If you're watching this video and you're not familiar with it, you can search for Tesla Trading Bot on Google or in the caption of this video, and these 2 videos will come up for you to watch. The 13-minute video is about Phantom, and the 16-minute video covers other aspects. So, here we had a buy signal. I gave this robot a hint, where you enter the headquarters, where you are going to be targeted, what kind of crime you are committing. Search Tesla Trading Bot. We had a buy signal. Set the stop loss at the previous low or the white line. Risk-reward ratio is 2. Profit, 69%. Let me tell you, for the long position, we can set the stop loss at the previous low or the white line. It doesn't really matter where you prefer to place it. We set the risk-reward ratio to 2, a bit lower than that. So, this risk-reward number comes in at 2. And how much profit did it give? 69%. It can't be more than that, right? 69% is recorded, 20, 13, and 18, positive, 13 and 18. This can't be copied. This is 13 and 18. We had a strong signal here and entered a sell position based on the candle's close. Previous stop losses or the low can be used, or the nearby white line, which has been hit. The next day, the risk to reward ratio remains the same, meaning for every profit, we compensate for 2 losses. Let's sum up from 6 o'clock until now. Assuming you started at 6 and traded on a specific time frame, we got a 0.57% return with a leverage of 20, ending at 11.4. With this leverage, we accept the loss. If you can accept losses, avoid trading. Follow risk management rules if seeking profit. We had a sell signal and entered based on the candle's close. Stop losses above, even the white line are close, and the risk to reward ratio is 2. We might have hit slightly less, but tomorrow we'll see a simple 1 and 7 at the level. 5 and 7/100ths is correct. 5 and 7/100ths is correct. For example, we took leverage 20 and 11 and 4. 11 and 4 are negative. We accept wholeheartedly. If you don't accept this, don't trade at all. That is, if you are only looking for profit, you should go to the law of the device with this story. Well, here is a sell signal. We take a sell signal position, close the candlesticks above. Even white is very close to it. And the risk and reward are 2. These are peaches. Now we have a little less. Tomorrow, we will have 1 and 7 simple ones at the level. Zabdar 20. Sorry for the mistake. 107. Zabdar 20. This is correct. 21 and 4. Positive. 21 and 4. Positive 21 and 4. We will also make it green. We also definitely make it green on the 21st and 4th. Another signal was based on candle close. Previous stop loss gave a 2.1 risk-reward ratio, yielding 1.54 profit. Multiplied by 20, it's 30.8. Why 30.8? Yes, this is universal because the sell signal assumes taking both long and short positions. But taking this sell hits stop loss at 56.6%. This calculates all. 56.6% times 20 is 11.2 minus 11.2. Good sell here, with 2.1 risk-reward. Previous stop losses were 18 times 20, which is 36. Moving to the next part. Yes, I'll take this. It's a universal point because this sell signal is based on the assumption of taking both long and short positions simultaneously. If you took this sell position, it would hit the stop loss at 56.6%. This calculates everything. 56.6% times 20 gives us 11.2 minus 11.2. We had a good sell here with a risk to reward ratio of 2. The previous stop losses were at 18 times 20, which is 36. Let's move on to the next part. Sell with risk to reward ratio of 2. Stop losses at 36. Buy signal set. Hit target with many signals. Good signal. Close indicated entry. Stop loss risk free. Set at 2. Now. A buy signal was here. Target set. It hit the target. In the middle with many signals. A good signal. Close. Indicated entry. Previous stop loss. Risk free. Set at 2. Now 2.1. Making it 1.99. Not a big deal anymore. 98 times 20 gives 19. A sell signal hit the target. It enters on candle's close. Previous stop loss is set. Profit of 1.54 times 20. Becoming 31. Adjust fees. Mistake should be 30. The 900 has a return of 100, 908 returns 20, 19. We had a sell signal that either hit the stop loss or the target. It hit the target. Enter on candle close, set previous stop losses. It hits target, not stop loss. Profit is 1.54 times 20 equals 30. Mistake should be 30. Sell signal hit target quickly. 1 candle later, entry on close, reset stop losses. Return is 270% with 20, 15.4, 15.4. We enter on the close of the candle. And the previous stop losses are set. Here, it won't hit the stop loss anymore. It hits the target. It gives us a profit of 1.54 times 20, which becomes 30. We might have even hit a little less than that, but we need to adjust the fees as well. We made a mistake. It should be 30. We had a sell signal that hit the target quickly. 1 candle later, the close of the candle indicates entry, and the previous stop loss is reset. So it doesn't get any simpler than this. The return is 270% with a return of 20, 15.4, 15.4. We had a sell signal that hit the target quickly. 1 candle later, the close of the candle indicates entry, and the previous stop loss is reset. So it really doesn't get any simpler than this. The return is 270% with a return of 20, 15.4, 15.4. We had a buy signal and we're entering at the close of the candle. You can place the stop here. The distance from the entry point to the white line is good. You could have set all the previous lows. It doesn't matter if this signal gets stopped out. But I wanted to show you an example where the white line is also good. You can set a low, you can place the white line, it doesn't matter. Now, if this stop gets hit, how much would it be? 300%, a multiplier. You're not too far off. The ATR is so close to you. 90% went into his pocket and he gave me 1T500. We'll all go with the respirator twice. Don't be cowardly. Anymore. 32 turns into 6. I'll just do this on the calculator, my dear. Why do you have to calculate this mentally? Come on, my dear. -6. This is from the sell signal. We entered with a risk-reward ratio of 2. The white line was close. It could have been set at previous highs. If we take 1.7% and multiply by 20, it becomes 21.4. We avoided using a calculator. We're addicted to them. Another. Signal had us enter at the candles close. The previous stop loss was set and the risk-reward ratio of 2 applied. It hit our target, but even if not, I think it would have hit higher. 7. 2 weeks. 21.4. Addicted to calculator. Signal at close. Stop loss. 2. Ratio. Hit target. Could be higher. Gave 660. 66. 2013.2. 10:05 p.m. Traded 6 to 10:05. See results. See together. Signal entered. Stopped. Entered. Hit stop. Next. 0.64%. Leverage 20. How much? 0.64. 20I18. Find red. 18 here. Here exactly the risk-reward ratio gave us 6 and 60. If we want to take that, how much would it be? 66 times 20 is 13.2. What time is it now? For example, it's now 10:05 p.m. From 6 to 10:05 you've traded. See what you've done. Wow, wow. Now from now on, we'll see it together. This is a mistake. We have a story here. This was a signal where you entered and it got stopped out here, meaning we entered at the close of the candle. It came a bit into profit and then hit that stop. The next day, it was 0.64%. If we take a leverage of 20, how much would that be? 0.64 times 20 is 18. Let's find a red one, 18 here. And here, if you can't handle these negatives, you don't deserve these positives either. Let me be blunt. The market will make you understand later. So, if you see these 12 and 8, and you start panicking, you don't deserve this plus 13, this plus 20, or this plus 50 at all. Don't even think about trading. Go do something else. Buy signal at candle close, stop loss lower. Risk reward 2, 20x leverage is 21.8, hit stop 59, 60 makes you a customer. 60 times multiplier is 12. Buy signal followed. Risk reward 2, stop loss hit target, both 59. Sell signal here, previous stops. Risk reward 2, open. Taking 59, 60 makes you a customer. 60 times multiplier is 12. Let's reduce this. A buy signal followed. Risk reward is 2, hitting the target. Same positive. Both were 59. These covered each other. Sound is off. Now, we'll sum up. Also a sell signal here with previous stops. Risk reward is 2. Still open. Outcome unclear. Outcome unknown for now. Here, a buy signal. Let's take it. Place stop on white line. Place on white line due to significant distance. Or place at previous low. Your choice. Now setting at previous low. We had a sell signal here, and the previous stop losses are still open. The risk-reward ratio of 2 is still in play, but we don't know what will happen with this, for now. Here, we had a buy signal. Let's take that buy signal. This is a buy signal. Place stop on white line. The distance is significant in this case. Optionally, place at previous low. Setting at previous low. The previous low is slightly lower, about 2 pips. No clear outcome yet. We had a sell signal, still unclear. These three need clarity due to our 2.1 risk reward. If one hits target, two stop out, resolve it. The assignment is still unclear. These three should be given the most difficult assignment. Because if our risk reward ratio is 2, and one of these hits the target while 2 gets stopped out, we'll just be back to square one. You know what I mean? So, we need to focus on these three. You can put a stop here. You can take the previous ones and zoom in on this little candle. You can take this one. It depends on your analysis. I took the upper one to be safer, and this is a risk reward of 2. These two are almost all hedged. They don't help much. Normally, people avoid these, but now if it goes down, we don't have that target to go up. These targets cover those 2 stop losses, so that's the game. Now, let's set these aside and go collect some data together, have some fun, and see what we've done. Let's bring this one and put it here as our top one, and let's gather 12 positives plus or 12 negatives. But now, if it goes down, we don't have that target to go up. These targets cover those 2 stop losses, so that's the game. Now, let's set these aside and go collect some data together, have some fun, and see what we've done. Okay, let's bring this one and put it here as our top one, and let's gather 12 positives plus or 12 negatives. This means nothing. 12 negatives. This means nothing. 21 and 8. 21 and 8. We have one negative of 12 and 8. We have one positive of 13 and 2. We have just a 21, 4. We have one negative 6. We have one positive 15, 4. One positive 30, and one positive 19. We have one positive 36, and one negative 11, 11, 2. Next, we have a positive 30, a positive 30. 21, 107, 7 is minus 11, 4. These are all signals before, not taken. This is good and bad flow. 6 is bad, 180% profit with few signals. Next, positive 30. Positive 30, not counting 38th. 8th is mixed, so 21 for you. 21, 107. 7 is minus 11 and 4. More negatives. Rounded positives to plus 13, minus 14. 6, plus 16. All signals before this, not taken. Good and bad flow. 6 is bad. 180% profit with few signals. Count them. 3, 1 to 16. Made 18 trades. 80% successful. Time frame 1 minute for Ripple. Trade any time frame or asset. It says can't be done, but I'll show it can. We made 18 trades with 80% success. You can trade Ripple or any asset in any time frame. TradingView is available on your phone. Let's check Bitcoin. Buy or sell. Switch time frames as needed. We made these 3 trades and had an 80% success rate. It says it can't be done, but I'll show you it can. Trade directly on your phone. TradingView is there too. Now to Bitcoin, buy or sell. This time frame is 1 minute. Switch to 30 or 60 minutes. To Litecoin. My analyses. Let's go check out a few more assets. You can also trade directly on your phone. TradingView is available on your phone too. I recorded this on my laptop for a bigger screen, but I have videos showing that you can trade on your phone as well. Now, let's go to Bitcoin. Buy or sell. This time frame is 1 minute. You can switch to a half-hour time frame or an hour time frame. You're going to say Litecoin was my own analysis. You work with this router with use of Forex, XIOST. Let's take 3 minutes. Let's take 5 minutes. Now let's go back to our Ripple. This is how the systematic approach works. I'll put the link to this page in the caption, where you can purchase the robot as a subscription. You can buy it for 1 month, 3 months, 6 months, or annually. It gets added to the TradingView chart, and you can use my analyses anytime you want, and enjoy it. I was here, sending you this. Good night, this robot. Goodbye.